Hello people, welcome to Figure It Out with Rajat. Today we will learn about market intermediaries. What are market intermediaries? Market intermediaries are the institutions and organization or organization which works between the issuer of security and the purchaser of security. Or you can also say it are those organizations which work between or which facilitates security transactions. In today's topic, we will cover following market intermediaries: stock exchange, depositories, depository participant, trading members, authorized person, custodian, clearing corporation, clearing bank, merchant bankers, and underwriters. Stock exchange. Stock exchanges are the places where the buyer of security purchases security and the seller of security sells security. Remember, they are only those securities which are listed in the stock exchange can be traded here. Stock exchange provides a trading platform where buyers and sellers can transact in already issued securities. For example, Bombay Stock Exchange, National Stock Exchange, or Metropolitan Stock Exchange of India. Here, trading happens through electronic trading method and the buyers can purchase securities whereas seller can sell their securities. Next is depositories. Depositories are those organizations that hold security of investor in electronic form. Basically, it helps in facilitating electronic transactions because the security is held by the depository in the electronic form or in the form of electronic record. For example, CDSL and NSDL. NSDL stands for National Securities Depository Limited. National Securities Depository Limited works with National Stock Exchange, whereas CDSL, that is Central Depository Services Limited, works with Bombay Stock Exchange or is associated with Bombay Stock Exchange. Depository participant. Depository participants are agents of depository through which it interfaces with the investor and provide depository services. It basically means it is an agent of depository which helps the individual to do transaction with depository. Remember, the investor level transactions are held by depository participants, whereas company level transactions are directly associated with depositories. Trading members. Trading members are registered brokers of stock exchange that facilitate buy and sell transactions on stock exchange. Basically, they are brokers which helps the investor to buy and to help sellers of security to sell their investment. They charge commission from both the parties and that is a main source of income for them. Authorized person. It is an agent of the previous one, that is trading member or registered broker. Authorized person who is appointed by a stock broker or a trading member as an agent to reach out to the investor scattered across the country. Custodian. Custodian is an entity that holds funds or and securities of large clients. For example, insurance companies, banks, mutual fund, and other such entities. Clearing corporation. Clearing agencies ensure that the members on the stock exchange meet their obligation to deliver funds or security. It helps in the settlement of transactions. Clearing basically means a settlement of the net obligation of buyer or seller, and settlement means settling the transaction, that is the delivery of securities or acceptance of fund. Clearing bank. It is a bank account which an investor has to maintain to do transaction electronically. I- Clearing banks are the intermediary between clearing members and the clearing corporation because they transfer the fund from the investor's account to the seller's account, or the, you can say, from investor to the user of the fund, or the one who issues security. Merchant bankers. Merchant bankers are the entities which act as a manager, investment banker or lead manager. Merchant banker basically helps the company to structure its capital, to price its securities, and other related activities regarding issue of security. There is one more related term, that is underwriter. Underwriter are intermediaries in the primary market who undertake to subscribe any portion of public offer of securities which may not be bought by the investor. Underwriter assures issuer of security of the subscription of their security. They make sure that the entire issue is subscribed by the public. If it is not subscribed by the public, then the underwriter will purchase it. Underwriting is also of two types: hard underwriting and soft underwriting. Hard underwriting is an underwriting in which the prices are determined after the fixing of price of security, whereas soft underwriting means underwriting which happens before the determination of price. And it is our last topic, and here we end. Thank you. If you like it, then like, subscribe and share. Thank you. Thank you from Figure It Out with Rajat.